Hello and welcome to our conversation on the accounting equation. In this session, we will try to understand the concept of equity and its effect on the accounting equation. For that, we will pick up some transactions and convert these transactions into accounting equation. So ABC started a business with a capital of 10,000. So the accounting equation will have source of 10,000 as cash and capital of 10,000. So business started with cash of 10,000 supported by the corresponding source of capital. Purchase stock of goods on credit. So another asset stock comes into picture and the corresponding value is 75,000. And this stock they purchased it not for cash, so no change in cash, but a liability comes into picture and that is the creditor. The value of the liability will be equal to the value of the asset which has been purchased on credit. No change in the capital. Sold 50% of the stock for 40% of the stock for cash. So therefore, stock will reduce to the extent of 60%. Will reduce to 60%, and the cash increases by 250,000. No change in the capital and no change in the creditor. No change in the creditor. But if you can see that the stock has been sold for profit. So sales to the extent of 250, the corresponding value of the stock is 30,000. So there is a profit of 220,000. We can derive the profit as sales minus cost, or can also be derived as A minus the corresponding sources as on that date. And we'll, of course, as we move along, we will get into the income statement, balance sheet, and cash flow. Then the calculation of profit will become more transparent and very clearly visible. How did we arrive at the profit? Now, the company is having made this profit. We can call this as a gross profit for the time being because there are many expenses which may have to be incurred with the passage of time. Now, salary paid 10,000. So salary will cash will reduce to the extent of the salary. Cash will reduce to the extent of salary. No change in the capital. No change in the creditor, but the profit will reduce to the extent of the salary. So we can say less salary, okay? We can put less salary to less salary so that we can understand also here the effect of the 10,000. So profit will reduce to the extent of 10,000. Okay, so we can derive the profit as sales minus cost minus the other expenses. Or the balancing figure can also be called as the profit. Now the company decides to distribute this profit. This profit is of the for the shareholder generated by the company. However, the shareholders have no right to demand this 250,000, 210,000. Suppose if the company decides to, when I say company, the management decides to distribute 50% of the profit to the shareholders, and we call that as a dividend. The dividend is a distribution of profit. Dividend is a distribution of profit among the shareholders. Okay, so I can write down here, dividend is distribution of profit. Dividend is distribution of profit among the shareholders. So what will happen to the profit? Profit, to the extent of the distributed dividend, it will go down. And no change in the creditor, no change in the capital. However, cash will reduce to the extent of 105,000. Okay, cash will reduce to the extent of 105,000. And no change in the inventory. So therefore, you can see that the company's profit has come down because the company has decided to distribute the profit among the shareholders. Now, if you can convert this or observe as a condensed accounting equation, we know that accounting equation is A is equal to E plus L. At any point of time, the A should be equal to equity plus liability. So we can see from the first phase, the assets are 10,000, the corresponding equity is 10,000, and no liabilities on this date. If I pick up the last one, at any point of time, A will be equal to E plus L. And the last point we can see on the last day, the equity is equal to capital plus profit 105 plus 10 115. What was the equity before the distribution of dividend? Before the distribution of dividend, equity was 210 plus 10, that is 220. But before even the payment of salary, it is 220 plus the capital. So we can see that equity has been changing. Equity changes, okay? So it changes in equity. Why will equity change? Equity will change if capital changes. If capital changes. If there is a profit. If there is a loss. If there is a distribution of profit. So at any point of time, the company's equity, which is the shareholders' money, can change if there is a change in the capital, if there is a profit, if the company earns profit, if there is a loss, or if there is a distribution of profit. And equity is an important point issue while understanding the financials of a company. Now let us take another example, because here that we had only few. Now let us observe this. Okay, the first one is same. So the capital of the company is equal to the cash contributed. But in this case, the company took a loan, and so therefore the cash goes up to the extent of loan, no change in the capital, and the liability arises, that is the loan. Purchase inventory to the extent of 200,000 for cash. So therefore cash reduces to the extent of 200,000, no change in the capital and no change in the loan. They sold 40% of the stock, for 100,000. So stock will reduce to the extent of 40%, that is 200,000, minus 40%, that is 80,000, which is equal to 120 now. And no change in the capital, no change in the loan, but there is a profit. Profit is equal to the balancing figure. If you want, we can also derive this profit as sales minus the cost, which is equal to 20,000. Paid salaries, so salary, the cash will reduce to the extent of 30,000, no change in the inventory, no change in the capital, no change in the loan. However, profit will reduce to the extent of the salary paid. Observe, now there is a loss because the profit is not, gross profit is not sufficient to pay the salary also, to meet the salaries. Now interest, you're taking a loan of 12%. So that means 1% per month. So interest has been paid for the month. If interest has been paid for the month, that is 1% on 2,000, 200,000. 1% on 200,000 is 2,000. And so cash reduces to the extent of 2,000. No change in the inventory, no change in the capital, no change in the loan. However, there will be a change in the loss because there is the loss is equal to sales minus cost of goods minus salary and minus interest. That also we can find that like this. No, we can also derive profit or loss by examining the sales minus the expenses. The sales minus expenses, sales is 100,000. So the first profit that we arrived at is a gross profit, 100,000 minus cost. But how did we get negative 10,000? It is 20,000 minus 30,000. How did we get the negative 12,000? It is minus 10,000 minus 2,000. So profit can be derived as a balancing figure or can be derived from this income statement, which we did not discuss yet. We did not discuss this yet. Okay. So now let us see the accounting equation, the summary accounting equation. The summary accounting equation will look like this. The summary accounting equation is equal to E plus L. A is equal to E plus. At any point of time, A will be equal to equity plus liabilities. A will be equal to. Now observe the equity. Why did the equity change? Equity increased because the capital has been raised. Equity increased because there was a profit. But after that, equity went on reducing because of the loss. So to summarize, the concept of equity, in fact, accounting equation can be used to explain assets, liability, incomes, expenses, equity also. Any item can be explained through the accounting equation. Every transaction will have an effect on the accounting equation. And in this session, our focus was on equity. So equity can change if capital changes, or equity will change if there is a profit, or equity will change if there is a loss, or if there is a distribution of profit. Can I write like this? Equity is equal to A minus L. Okay. Equity is also equal to capital plus profit minus losses, if any. So equity can be determined on the basis of A minus L, or can also be determined as capital plus profit minus. Though this word profit for the time being, we are just using the word profit. Slowly as we move along, we'll change the word and call that as a reserves, or we'll use as the retained profit. So the objective of the session was to understand the accounting equation and observe the impact of the change in the equity on the accounting equation. Okay, thank you.